Welcome to another live stream. My name is Hans. I'm simply Dude on the internet, and in today's video we are going to be covering some more complicated macro things, but it's at the end of the day pretty interesting and very valid to the crypto market, as we know much of all of the assets, especially cryptocurrency, is now correlated to the rest of the market. Almost everybody believes that now, although it has taken this full cycle to really set in. But firstly, we are going to be checking out how high the interest rates have to go to beat 7% inflation. This is the inflation projected by the Fed, although most of us believe that it's probably in the double figures, like 20%, closer to 20%. Either way, that is their number, and we'll see how high we have to go if we need to defeat that inflation. Many people believe that we have to have interest rates higher than that 7%. Many others believe that the economy would have broken by 2.5% already, like George Gammon. Although he's been proven wrong, everything's been going all right, although the market has crashed. But these market cycles, the boom and bust cycles, aren't by accident, right? They've been doing this for more than hundreds of years for a transfer of value, right? It's actually nothing new. We'll be looking at how the interest rates follow the 2-year bonds, and the 2-year treasury bonds actually looks like they have topped, and as soon as they topped, the Fed actually started sounding quite dovish, and I'll show you that to you guys. We'll look at the yields inverting, meaning that the short-term bonds are actually giving you a less or more return than the long-term, the 30-year bond and the 10-year bonds. This could indicate that people expect a short-term economic boom, but are not as confident about the long-term growth. It could also mean that investors are not fully confident in the long-term outlook of the economy, and therefore they prefer to invest in a safe government-backed investment such as the 2-year treasury bond, which offers a higher return, right? Then we'll also obviously look at our BTC, ETH, Hex, XW, Hex, BTC. Because the weekly closed yesterday, we'll see if we got some buy signals over there. And also we'll take a look at Litecoin, as it's been popping off and it's kind of like leading the market, which is interesting to see. And we'll look at the moving averages, and we just use Litecoin as an example of what good market structure would look like, or just higher lows on the weekly time frame. Okay, so let's get right into it. And I haven't grabbed my, there we go. Okay, so firstly we are going to cover how high the interest rates have to go. So this is the United States interest rate. This is USINTR, United States interest rates. We can see on the side here it's sitting currently at 4%, right? A 50 basis point will put it at 4.5, and that's what we're expecting, what the market is expecting. I wanted to pull it up now, but I don't know if I'm going to find it quick enough. But either way, if they want to get above inflation, I mean, we're looking at July, because these are all, I lined them up each to when the Fed meetings are next year. So we've got one in December, the 14th, and then the 1st of February next year, the 2nd of March, the 3rd of May, the 13th of June, and then the 27th of July we'll have these interest rates. That means if they want to get above 7%, they would need to rate, if they're pivoting to 50% basis points. So 1, 2, 3, 4, 5, 6 in 6 meetings, which would end in July. Only by then would they get above the 7% inflation, which I doubt highly, and it would be strange for them to start reducing the rates by already from 75 to 50, right? Why not just continue with 75, or at least a full basis point every next, like they could get it done by March next year already, right? But pretty weird why they would not do that. What I'm going to pull up here is the 2-year treasury bond, and I'll just read out for you guys what a treasury bond is. This is the 2-year. Let me just read it out for you. A US Treasury bond is a type of a debt obligation issued by the US government. So the Fed or companies or individuals buy a bond from the US, right? Treasury bonds offer a fixed interest rate and are backed by the full faith and the credit of the US government, making them a relatively safe and low risk investment. They are typically issued with maturities of 10 years, and we're looking at the 2-year one. There are shorter terms one or longer, 30 years being the longest one, and can be purchased in denominations ranging from $100 to $1 million. Probably a lot more. I don't know how frequent that is. Let me just go to the YouTube that is on. So yeah, it would make sense, or this is how it's supposed to work. The interest rates or the shorter term bonds yield is supposed to yield less than the longer term ones. Like the 30-year is supposed to be the most lucrative or the best paying bond, but I'll show you guys now. The interest rate tends to follow the 2-year, and we can see perfectly how this has played out in the past, how it just follows it beautifully. And when was this? March in '88. So as it tops out, they also top out with the interest rate. So it topped out here at, when was this? In 2000. The US 2-year Treasury bond peaked at 7, just above 7%, and the interest rates then peaked at 6.5, and when it topped out it went down. We should probably look at it from the US Treasury. I've got it up here actually, the 2-year yield, and then we just add the US interest rate on top of it, so you can see new price scale, so you can do technical analysis on it. So the US Treasury bond, the 2-year peaks, and then they stop raising rates, and it starts dumping, they start following, right? This is in 2000. We can see that the 2-year was yielding around 0.25 or 2%, 0.15, 0.3, very low, right? And then it started going up, and then a few months later, February 20, which is now the most recent tightening cycle, they started raising rates to catch up with it. But interestingly enough, this has it looked like it has stopped. If you look on it on the weekly and pull up the RSI, we can see massive bearish divergences at the top here, and I'll show you in the past when the 2-year has stopped out what it looked like. Right, price is going higher aggressively, and the interest rate or the indicators are going low. So this is confirmed bullish divergence, excuse me. And in the past, when was this? This was February 2018. You can see it going up aggressively, the price, yet the RSI is going lower. So once again, this was a top up here, and this then came into, this is actually where Bitcoin found its bottom and started rallying. And now the same thing is happening here. The 2-year treasury bond looks like it has topped out. I mean, this is a very, very aggressive bullish divergence at the top, and it's now starting to break down, right? And as soon as this started breaking down a few weeks ago, the Fed started to become more dovish and the market is now pretty much pricing in a 50% basis point, right? A basis point. So this is like a soft pivot, or the first step of the Fed pivot. So the first step will be reducing the rate at which they hike. The second one will be stopping the hike, and the third step will be starting to loosen or lowering the interest rate, right? So it looks like the Federal Reserve might not even get above, because this peaked out at 4.8, and the interest rate is sitting at 4% on the left here. I don't think you guys can see me. So this is like showing us that they might actually have peaked here, right? They're gonna do a 5%, a 50% basis point next week, which would put them at 4.5%, and the 2-year bond peaked at 4.88. So they can do another 25 after that, which would put them at 4.7, but they've never raked it above what the 2-year yielded. So back here they hiked, which was in 2018-29 tightening cycle. They hiked it up all the way to 2.5, yet we peaked out at 2.9. Let's go back into the past. They peaked up here at 5.2, and the rate hikes went exactly to 5.2, 5.25. So just below it again. Let's go back to May of 2000. The 2-year yield went all the way up to 6.9, or let's round it off to 7, and they rate hiked all the way to 6.5. So they're always like 50 basis points below what the 2-year yield has yielded, right? Then this was 94, it peaked at 7.4, and they hiked, 7.72, and they hiked it all the way to 6. What's this? 1989. It peaked at 9.9%. The 2-year was yielding 9.9% for 2 years, for holding a treasury bond for 2 years. And the interest rate was at 9.75. So they've never hiked the interest rate higher than the 2-year treasury bond has yielded in the past. So this is incredibly interesting, as it just seems like they can't be going any higher than they are currently at. So very interesting. This could be obviously a reversal in the market, right? So I found that very interesting. It's a bit complicated. I know many might not understand it. It took me some time just Googling it and trying to figure out what I was looking at, right? But pretty much is what I'm saying is the 2-year has peaked, and the interest rate tends to stay below it, and it has topped out. It looks like it has topped out, in fact, and they can't, if they hike it higher than they have done, higher than 4.8, the actual interest rate, that would be the first time in, I mean, like 30 years that has ever happened, right? Okay, so we've covered the interest rates following the 2-year treasury bond and the bearish divergence that is placing out. It looks like a top up here. Let's look at the yield inversion. So this is the 2-year, and what I'm going to be adding is, this is the 30-year, right? So if you buy a 30-year bond from the US market, this is currently yielding 3.5%, and the short-term one, which is the 2-year, is yielding 4.3%. So you're yielding more in short-term bonds than the long-term one. You see, this is normal. Like, this is what it's supposed to look like. The 30-year in March of 21 was yielding 2.4%, and where the 2-year, the shorter time frame one, was yielding 0.1, right, and 0.2 at its the highest point. So, I mean, they're currently breaking something, because I don't think, I haven't gone through all the data, but I don't think it has ever yielded this little. Like back here, it was, the 30-year was yielding 3.4, and the 2-year was yielding 3. And it's always been above it. We can clearly see it's above it here. Now the scales aren't perfect. Here it was yielding 5%, excuse me, 5.3, and the 2-year was yielding 5, so still above. This was 06. This was the great financial crisis in 2007. George Gammon also looked at this previously, and this is what he's talking about. Short-term bonds are yielding more interest than the longer-term ones, which is pretty darn weird, because if you're holding something for longer, you're locking up money for 30 years, you would expect that you're going to be paid higher, more amounts, right? And this is just, I asked this on the internet, or I googled it, and it says that this indicates that people expect a short-term economic boom, right? So, and the year before an election tends to be very, very bullish. So this is 2023. We've got the elections in America in 2024. Because the ruling party starts to spend quite a lot, right? So just looking at the yields, it seems like the market is expecting greater gains in the short term and putting less relevance on the long term, right? Which is worrying for the long term, but for the short term, it's bullish, right? Then let's go into BTC and ETH. So enough of the macro things. I'm pretty sure all of you are tired of that already. But it is important, after all. It will give us an indication of where we might be, right? So we got a weekly, this was engulfing candle, interestingly enough. These are very powerful doji candles down here. This measured move takes us all the way to 18,000 area if we continue to break out here. We have bullish divergences on the RSI on the weekly. This is very powerful. Let's see if the cipher for BTC has thrown a green dot. So there's a green dot currently, but we're only at the start of the week. This would need to confirm by the end of this week, and we'll take a look at it. We're above the RSI moving average. So it seems like there is a little bit of a bullishness going on. Let's look at the crypto bubbles, because I'm pretty sure if I'm looking at this, there will be quite a few coins that are popping off. Yeah, so Hex up 16%. Is this? Okay, so it does, oh, it's weekly. Let's look at the daily. Yeah, so we can see a lot of green, right? Axis, this was, this coin actually took a massive punishment. This is like the gaming coin narrative, right? Hex up 5% on the day. And remember, Jenkins, if you guys follow him, he was saying that we need to fill this wick because we got rejected. And I say to that bullshit, you must pull up the indicators, because all of the indicators were pretty much oversold, and we at least have a little bit of upside to go. Let's see what ETH is doing. Not much. Also an engulfing candle back there. Another buy signal printing on the weekly, although it hasn't confirmed yet. So no divergences on the RSI. But this bullish divergence on BTC is nothing to scoff at. And it's on the weekly. We can see price is going down, right? And the RSI trending up. So yeah, so there's definitely a little bit more upside in the market. Let's look at, so I've got the Hex chart up here. Let's pull up the RSI, the stochastic. So the RSI has a lot more room to go. We're currently sitting at 50% right in the middle. And your sell signals print up here, right? Like back here. So there's still a lot more room to go. This stochastic RSI likes to trend just like down here. So we can see how long it spent time for all the way from here to here, just ranging at the bottom. So this is a very a trailing indicator, right? So you can maybe wait for it to create some bearish divergences at the top here. That would mean with price going higher and the stochastic RSI moving down. And then the MFI, it's not really worth looking at. So I've also been playing around with the Icon-Ashi candles. That Benjamin Owen guy took a look at it. Now these candles just simply represent the average of the previous, or they're called by the Japanese average candlesticks instead of just candlesticks. I'm not going to go into the formula. It's simply just the high and the low, the open and the close divided or added together and then divided. The open of this candle is it's normally right in the middle of the previous candle. So the close and the open added together and divided by 2. This gives you like nice clear trends. Now this is the 3-day. Let's go to the weekly. We're starting to print a green weekly candle, and then you tend to get a nice rally, but maybe this is a bit shorter time frame. Let's just look at the monthly. So we've been in a clear bear market. This just cleans the chart up a bit and shows you the trend quite nicely, right? So we've been in this bear market since November of 21, and on the monthly it still hasn't changed. So you want a green bar to print, and now we don't have much more data here. It would have been nice to have all of it. Maybe we can look at it versus V1. On the monthly. Let's just wait for that to load. Wow, it's taking along. Failed to load history. Oh, here we go. Let's just remove everything. So yeah, you can see pretty much a very strong trend is when you don't have a shadow at the bottom. And obviously for the downtrend, you don't have shadows at the top, and it's really been going quickly when we came into June of 2022. So what you want to see is you want to see a green trend printing with no shadows or wicks at the bottom. That is a strong trend to the downside. Now if you used this to sell over here, what was the price? Like at 21, and then just wait for a green candle to print, and we'll see when it prints. You can just see that when this was confirmed, you would have got it out at 21 cents. Now it's very hard to sell the top, right? But this just shows you where a good trend is. And then maybe let's say it starts printing at 3 cents. So you got out of most of the downtrend, or a large amount of the downtrend. I wouldn't say 50% is most of it, like, right? Because this was already 50% down when we were at 21. Let's look at the Heikinashi candles on BTC on the monthly. Let's put the log scale on. Let's remove everything. So you can see in 2018, this candle got you out at 9,400 and got you back in at 4,800. So you saved like 50% of your stack just by going off the Heikinashi candles. And then again, it got you out at 10,300 and got you back in at 8,100. Yeah, so it just shows a strong trend, cleans up the chart a little bit, and yeah, so these are called the average candles. So it's just another thing in your toolkit. So we've looked at ETH, looked at Hex a little bit. It's pretty much my analysis for this is I expect more upside. And your reload zone or your major resistance zones I don't know why my candles aren't up. We'll reverse that for the short position. So this is where resistance is coming in the next few weeks or days, right at 4 cents, right, from the bottom to the top. So there's going to be a lot of resistance coming up here. We're at least 50% or halfway through the RSI before we get oversold. So there's definitely a lot more upside. And if Bitcoin plays along and takes us all the way to 18,100, I would expect us to at least get up to this position, this area, right? And maybe top out up here with a blow off top. Hex likes to do a blow off top with a little bit of bullish divergences up here. You probably won't even see it on the daily candles. You'd have to go to the 4 hourly. This you will see on the indicator going down, and on the RSI or on the price you'll see something like this, and this will tell you the top is in. Price going higher, yet the indicator is going lower. But that would be on the shorter time frame, maybe the 4 hour or something like that. So we are currently above the 3 cent mark where we're supposed to have been rejected and come down to retest the lows. And on this chart, which trades the most liquidity, we have already filled this wick. We've come down all the way below it, or very close to the bottom. Let's measure that out. It's like less than 1%, I'm pretty sure. (1%), 1.5%. Okay, let's look at, let's see if we've printed a weekly buy signal perhaps on Hex, on the cipher. So no buy signal yet. Let's see what wrapped ETH and Hex is doing. No buy signal yet. Let's see if the Heikinashi has printed a new candle. No. Hex versus BTC, still not. Let's check the weekly for a buy signal on Hex versus BTC. No buy signal yet, but massive divergences down here, right? And on the USDC pair, and not even to mention the massive RSI divergences on the weekly. Massive. Very, very bullish. Very few charts have this bullish divergences. Let's quickly look at Litecoin to compare it. Because Litecoin has now broken out. You can see this beautiful W that it's formed. Let me just draw it out for you guys. This is good market structure. It has defended that bottom. Yeah, even here there was no bullish divergences yet. A little bit of a divergence down here, but I'm not quite sure what indicator the cipher uses to print these divergences. Yeah, so this is perfect. Like, this is what you want to see: a low, a high, a higher low, and then you finally break out of the W. This is your sign of strength. You might get a retest and then off you go. But we can do measured move on Litecoin to see where it's going from the bottom to the top, and paste this at the breakout point. So Litecoin is going to at least $1,313 from here. So it seems like Litecoin, interestingly enough, is leading the market currently. Let's look at it versus BTC. Yeah, it didn't give you much of a chance to go long, but outperforming BTC currently. So yeah, there you have it. Some of the market is definitely popping off, right? Lots of green into December. I think I've covered everything. Yeah, maybe put on the moving averages. This is another thing you can do. Let me just remove these down here. The 13 EMA. Now this is on the weekly chart. You want these two to cross, and then the simple moving average at 30. When these cross, maybe change the colors. Okay, the slow moving one is green and the fast moving one is pink. When these finally cross down back here, that is what you want to see. Let's look at it, what it looks like on Hex. So we haven't crossed yet, right? Let's see X versus BTC, X versus ETH. No crosses yet. Let's cover some of the, quickly look at if, no, this Trust wallet is just popping off because this is a self-custodian wallet, a lot like MetaMask, and it's just performing well after the FTX collapse, and that's predictable, right? Chalice crossed back to here when the bull market started, or the World Cup started, and it's coming down now. And now I'm just quickly flipping through them to see which of these are already bullish. DYDX, also a decentralized exchange, a decentralized leverage exchange. This looks really good. You see some of these altcoins have already crossed and are almost ready to go. Look at Uni, also a decentralized exchange. Ravencoin, a false breakout right there. AVAX, there we go. Let's see if this actually has divergences on the weekly. Yeah. So this looks a lot like Hex, AVAX. But this is also a layer 1 coin like Pulse Chain. And I expect this to do really well in the next bull run. This is also a layer 1 coin. It's like almost crossing. It has bullish divergences down here. This also looks quite a lot like Hex. If I'm just looking at these. Let's see how far down it's been. 96%. So I mean, it's pretty much picture perfect, the same as Hex. There we have Hex almost crossing. We have bullish divergences on the RSI now, down from 95%. Was this lower here? No. Okay, so this is not bullish divergence. Aave as a lending platform, almost ready to cross. Yeah, we're not going to talk about that. GRT. So you guys can see that all of these coins are pretty much coming very close to their weekly crosses. this is just one indicator. Cake, also being a decentralized exchange, has now crossed. So yeah, all of these coins are slowly coming into their bottoms, right? Although they have not made weekly W's like Litecoin has yet. All of them are like in the process of completing their first V and then making a higher low and then popping off. VeChain, Misco. I mean, all of these pretty much look exactly the same. Ethereum still hasn't crossed yet, but if this first low holds, this is almost perfect market structure. And if this breaks above 2k, I'm pretty sure that the bear market is over. Flow, beautiful bullish divergences down here, not across yet. I mean, all of these things look so juicy. Like I wish I had so much money so I can buy everything. Let's see what you guys are saying. Good to see you on Matty's stream. Matty's still relevant, damn crazy. Lyman Ortega is our channel troll. I stopped watching after Quant Gang split up. Enjoyed Wales and Karim. Yeah, it was interesting, right? The long-term staking, they popularized it, right? Yes, Powell wants the rates to go to 5.5, so that's three more 50% rate hikes. Yeah, let's see if the 2-year tops out. I don't see them going any higher after that. Maybe we have the 50, then the 25, and then done after that. Hopefully they keep it at, what would that be, 4.75%. Hopefully they keep it there, because when the Fed starts reducing rates, the market tends to crash, right? We've talked about that. Although Wales Moon Math got a lot of people to buy the top, I would have dreamt about selling at 50 cents, yeah. I had no stakes. I had literally nothing to sell, so my stakes came loose when we started sacrificing for Pulse Chain. I wish I could have took profits and bought back lower. If you sacrificed, you technically did take profits, right? Laughing My Whales did get a lot of people to buy the top. I remember those streams. Jenkins also was bullish at the top, right? He was making videos being bullish at the top. Hi, anybody else have a sound issue? Is there a way to volume up? Is my volume a bit low? Sorry about that. It should be better now. This is probably where it should have been at. Sorry about that, guys. Hi guys, I'm not gonna try and say that name. I hope you're all well. I'm doing really well. It's nice and hot here, summer weather, so spending a lot of time in the sun. Volume is good for me. I'm using earphones. What's up, Hexagons? Okay, I'm glad at least on the earphones you can hear it. Sorry about that, please. Tin Top, what's up, Hexagons? The Zen chart, please. Yeah, we'll look at Zen for you. Hans, can you explain a little about when to pull the Fibonacci from the top and when to pull it from the bottom? So if you're pulling it from the bottom, you want to be buying, right? Let me just pull up the reload zone here. So if your 61.8, your 78.6 level, if these are at the bottom, this is when you want to be buying, right? And if you want to be selling, you'll be pulling it from the bottom to the top. From the top to the bottom, excuse me. And then you get your sell levels. This is where you're selling. So in the 61.8, the 78.6 level is at the top. Or, I mean, it doesn't really matter, right? Let me put that up for you. The 382 and the 236, these are the 61.8 and the 78.6 levels from the bottom, right? Because if you subtract 0.38 from 1 you get 618. So it doesn't really matter where you pull it from, if you get what I mean, right? But if you want to keep the 786 and the 61.8 like in the areas where you take action, then if you pull it, if the 786 and the 618 is at the top, this is where you're selling, and from the top to the bottom, this is where you're interested to buy, right? I hope that's understandable. I know it was a little bit. If you put it from the top to the bottom, then you will have your extensions at the top. You might just have to add them, or on default it will be there. This will tell you where the price is going in the future. And if you want to see where the price is going to the downside, there you have your downside targets. I know it can get confusing. You're going to have to play with it yourself to figure it out, right? But just to summarize, pulling from the bottom to the top gives you your buy areas, and pulling from the bottom, or from the, from the top to the bottom gives you your sell areas. And if you pulled it like that, it will also give you your extensions to where it might be going to in the future, right? It might not be accurate zones, but it will see, there will be action in that area. Maybe you get a wick, maybe it acts as resistance, and then acts as support, and then etc. Let's look at Zen for you guys. So we're pretty much floating at the bottom right now. You guys know what my opinion is about this. Mint it for free, especially when the gas fees are cheap, but don't put any more money in it. No, I thought, yeah, it has made new lows. You can see that it made a new low yesterday at 8.4. So this is a continued downtrend. Nothing has changed yet. But as soon as it's profitable for someone to mint it and sell it on the market, even if it's as little as $1, there are third world countries that will do that, right? So yeah, unfortunately, and there are very good tools, bots available publicly now where you can simply just use it, and it's very, very easy to use. Apparently they feel that price does not matter, right? So I'm not sure about that. I'm in crypto to get rich. How do you think Pulse Chain launch will affect the Hex price? In the short term, on the day of the launch or the announcement, so maybe we get 3 days an announcement before the launch, you will see the Hex price moon quite aggressively, go to the upside, because people want to get Hex to sell on the other side for Pulse or Pulse X. Then I would expect a sell off on Hex Ethereum side, because as people sell into Pulse, right? And then in the long term, I expect Hex to perform really, really well, as Pulse Chain is pretty much was created for Hex, right? So we can end our stakes early. And then I think that whales, large bag holders on Ethereum, will continue to hold their positions there. And then maybe one day we reach parity on both chains, but but I don't think that it's really very important at all. So this is Hex on wrapped Ethereum. On the daily, the RSI is pretty high. This massive move down here, I think this was like 100% move in a day. So there are definitely people that are interested in it, getting it on this chain. And it's just moving along, right? This is a little bit overvalued up here. If you're interested to get it, just pull up your Fibonacci tool and this will show you where value is at, right? From the bottom to the top. And this is where value is at. We need it to get down here. This is a new low, so we want it to come down, create a higher low, and move sideways to create a nice base before the bull run, right? People will be looking for altcoins to go in on that side. I don't think proof of work is going away anytime soon. Proof of work on all chains, right? So yeah, that's what I think about Hex on ETHW. Thanks for the Zen chart. ZenFT are coming in 3 weeks. This will burn trillions of coins. Yeah, I think so, but isn't it also creating coins? Right. But either way, I'm not following it closely. Did you hear that Havid Hex said that V3 isn't far away from release, maybe 4 to 5 weeks? I saw she retweeted or repackaged the information from Pulse Orca, I think that's his name. So apparently there's a bug that they have found on Ethereum ETH 2.2, which they notified the devs of. So that's pretty insane that the Pulse chain devs are finding bugs on ETH 2.0, right? And the ETH2 devs know about the issue, so they're trying to fix it as well. So that's pretty cool. We don't know for certain yet that the bear market is in fact over. I'll just show you guys where Hex was launched. Right, it was well confirmed by then that the bottom for the crypto market was in. So November the 25th. So Hex launched up here, right? In this area. And by then the bull market was well underway. We are currently somewhere here in this area. So if it takes another 300 days, can you guys handle that? But I don't think, apparently he's not timing the launch, right? So any time frame in this area between now and when Hex launched, I'd be fine with that, right? So yeah, you can see Hex launched well into when the bottom was already in, although we had this black swan event which you could not have predicted, right? Do you think that Hex is uncorrelated? Well, we can look for you at Crypto Watch. I haven't looked at this in a while. Crypto Watch. So it's spelled quite weirdly. It's Crypto Watch, but the CH is .ch. Oh, now I have to accept the terms and conditions. We can go to correlation. So this has nothing to do with Hex. This is a this is like TradingView, this thing that I use to look at charts. You can connect your API to your exchanges through this. You can track your portfolio, etc. So this is the 1 year correlation. You can see Hex is already added here. Maybe let's add something else. What is another coin that we can add? And just by looking at the correlation here, BTC and ETH is correlated 0.9%, right? Hex versus BTC is correlated 0.48%, and Hex is correlated to Ethereum 0.51%. So not as correlated as the rest of the market. That would be my answer. And this is raw data here. This is nothing to do with Hex. This is a third party that is showing technically Hex is decorrelated to the rest of the market. This isn't Wales only telling you this. This isn't Hans telling you this. This is Crypto Watch, a platform that has existed since the dawn of cryptocurrency. And it is telling you that it is in fact decorrelated. Let's add Litecoin. You can see Litecoin is 80% correlated to BTC and 85% correlated to ETH and 0.4% or 47% correlated to Hex. So there you have it. The data shows that it is in fact decorrelated. Let's look at shorter time frames, also sitting around 50%. Now look at the 7-day, the weekly, 0.01%, 1% correlated to the rest of the market. And in the day, negatively correlated in the last 24 hours. So you tell me, bro, it does in fact look like it. You could just remember, you must remember that this is Hex's first market cycle. Maybe it's a coincidence that its market cycle follows the rest of the market, right, and not Hex or the crypto market. It could be, right? But this data is interesting. Like I found it, it has surprised me when I've seen this in the past, right? So yeah, we have been going for 51 minutes. There are 15 people watching and 18 likes. Thank you guys very much. Do subscribe if you are not subscribed to this channel and you enjoy this information, and to get notified of future videos. And with that being said, I wish you all a very good week and a nice Monday, and I'll see you guys tomorrow. Okay, cheers for now and bye bye.